I'm going to remember to thank you for reminding me to record. Love that. Thank you for reminding me to record. Okay, so we are recording. Yeah, so if you do want to connect with me and you're not already connected with me already, you can follow me and connect with me here on Instagram at Chante_Oduwole. Okay, so I will be taking you through the Liberty strategy today. It's one of the ones I love the most. For those that I have shared it with and anyone's had the pleasure of doing, it's completely different, to your usual. So you're not in it for 3 minutes, although you can be if you wanted to, but it's so that you are a bit more at ease, so you can take 10-minute trades, 15-minute trades, 5-minute trades, whichever one suits you. I always tell everyone to always start off doing 15 minutes. Why? Because when you enter the market, if you enter in at a great position, even if you haven't got, the greatest position, if you're in a sell, it gives the market 15 minutes to do what it needs to do. Okay. Whereas when you've entered in sometimes for a 3-minute trade, you might be in profit for a bit, but just before you are about to clear that trade, it might come back up to your entry. So this is one of the reasons why I like Liberty. Also, it just take things easy. You don't feel like you're on edge watching it. Although I always tell everyone, never watch their trades. Just set it, move on, start looking for other setups that you could potentially take. Okay, so what is HFX for those that are completely new and have just joined on the call? So HFX is high frequency Forex. Okay, so you are participating in the foreign exchange market, is just in a different way. Okay, and the way that is different is the fact that it's time-based. So with traditional Forex, you are entering in at a specific position. So you are entering in at a specific position, obviously buying low. Okay, so you want to buy low or you want to sell high. Whereas with HFX, you can enter the market. Yes, you will still want to get in at the best price, high or low. However, you only need to focus on 2 buttons, which is put and a call. And obviously, basically making sure that you're entering in at the best position or time when you enter that trade. Okay, and all of your profits are fixed percentages. So you always know what you are risking when you put your amount down. So for example, if you were to put down £10 on a trade that gave you 80% back, it means you get £8 profit and your £10 back. If you were to lose that trade, the most you would lose is the £10 that you put down. So you always know how much you are risking and how much you are gaining, or how much you stand to gain should your trade go the correct way. And it's not a guessing game, because this is the reason why we have scanners. So, if you weren't using any analysis, what you would be doing is just guessing. Okay, and that's not what we're here for. We're not here to just guess with our good hard-earned money. We're here to use that money and turn that into more money from the profits. And one of the things I always say is the profits that I decide to gain from both HFX, traditional trading, or DCX, which is the crypto side, you always spend your profit. You do not spend your capital. So this is the best thing. This is a good starting place if you want to spend profit. All those little residuals you have coming in. If, say, for example, in a week, you've decided to cash out 170 pounds, that's profit that you have made on your own money. That's fantastic. Whereas a lot of people don't actually do that. Okay, so taking you through Liberty today, how you access Liberty. So I'm just going to get out of this screen if it allows me to do so. Okay, and where you want to start is in the IM Center. So you go to IM Center and then you go to Strategies. And then once you've clicked Strategies, you just scroll down and you will see that you've got HFX. So if you select HFX, you will then see Liberty and you just click on it here. If you don't want to go through IM Center, click HFX, etc., you can just type in Goliberty.im, as you can see here. So Goliberty.im and then log in straight away should you decide that you don't want to go through the IM Center. Best thing for you to do as well is bookmarking your page, just so that it creates ease with accessing it. Okay, so This is one of the scanners, okay? So this is the Liberty scanner, and underneath this scanner, you have a range of different strategies. So the two strategies that are the main ones that I'll be taking you through today is Webslinger and Simple Scalper, okay? So with Webslinger, this is what you see here. The reason why it's called Webslinger is because they look like spider webs, in my own opinion. Okay, so it does look like a spider web, and obviously the best time to get into a trade with Webslinger is when the web strings are spread apart. So when they're nicely spread apart, that is the best time to get in. Why? Because each of these lines, what they are is that they're estimated moving averages, also known as EMAs. Okay, and what that does is it's showing the momentum of the market. So as you can see here, I know that we're on a 1 hour time frame, but as you can see here, these web strings are spread apart nicely. And then when they are closed, I'm going to find an area where they are closed, like here, you can see that they're all clumped together. This is not where you want to take your trades. You only want to take trades when they are spread open. If any of you have had the pleasure of trading with Millie Mills, this is one of the strategies that she has been using in comparison to when she used to use the Simple Scalper, which is also one of the strategies we'll be going through today. Okay, so what I always tell everyone to do is once you open up the Liberty scanner, okay, the first thing you want to do, as I mentioned last week, is just dropping down to 5 minutes. Okay, so you go here because it always opens up on a 1 hour time frame. What you want to do is change it to 5 minutes. And the reason why you want to change it to 5 minutes first is just to kind of get an idea as to which way the market is going. And as you can see here, that it's going in an uptrend. Okay, so I'm just going to draw in a trend line so you can actually see. And you can draw in your own trend lines and learn how to draw in your own trend lines by also looking at Millie Mills's video. So she has a video on trend lines specifically under her favorite videos, which you can watch. Okay, so starting here, I'm just going to draw this through. And as you can see, this was respecting this trend line going up and has broken through. So when you see something like this, okay, when you see something like this, this means that there is a reversal. So it may mean that it's a pullback. So it could pull back to a certain area, which we could find out from what I could see roughly, just briefly looking, it may pull back to 785 before then going in an uptrend, or it may pull back to where it currently is. So where price currently is, it all depends once you do your analysis. Okay, this is not a trade you want to go in for a buy yet on, because you can see it's broken through this trend line. So this means that there may be, it's now going in for a sell. Only time will tell. Okay, so the reason why you drop down to 5 minutes is just so you can see, you know, an overall direction, which way the market is going, and taking the good setups. If you do find a setup that is good, then you can go on to the 1 hour time frame and then start doing your analysis. So let's go on to a different currency pair. Let's look at AUD USD. Once again, drop into 5 minutes, zooming out. So this isn't a great one. And the reason why I know this is not a great one is because if you find a good trade, what you should see is that if you're going in for a sell, it should be underneath a red cloud. So you should have let me go back to GBP USD to give you a good example of what I mean. Okay, okay, cool. So we've got a red cloud, as you can see. This is the red cloud that you see here. Price is underneath the red cloud. Okay, so we've got a red cloud, one confirmation. Price is underneath the red cloud. That's your second confirmation. Third confirmation is the fact that all of these web strings are open up. Okay, so they're all opened up. Okay, and we've also got the sell arrows. That's your 4 confirmations. So red cloud, price underneath the red cloud, web strings wide open, and for the fact that that currency was weak at this time. So this was 4 o'clock in the morning today. Should you have decided to take a few entries on this and you've done your markups, I'm going to show you how many entries you may have been able to take. Okay, so the first one was called here. I'm just going to make this nice and thick. Okay, so the first entry was taken here. You would then have gone onto your broker and then entered 15 minutes. Bless me. Okay, entered 15 minutes for that trade. So you would have gone on to GBP, USD, how long are you going to be in that trade for? You're going to be in for 15 minutes. Why are you going to be in for 15 minutes? That is how you would use this, this scanner. So you can do 10 minutes. However, I always say to people, try and do between 10 and 15 minutes if you are starting out. As you become more skilled and as you become more confident, then you can start to take 5-minute entries or 5-minute trades. Okay, repeating the confirmations. Yep, sure. Okay, so Webslinger for a sell. So for a sell, you should see a red cloud. Price should be below the red cloud. That's your second confirmation. The web strings should be spread apart, as you can see here. That's your third confirmation. And your fourth confirmation is the fact that you should see some sell arrows going in the direction. That confirms the other three. Okay, so once you've selected 15 minutes, as you can see, so 5, 10, 15, you would have cleared all the way down here. You would have cleared that trade. Okay, and the reason why this pops up with a sell, I'm just going to zoom in so you can all see. What happens and when this will call for a sell is when this red box, which is a candlestick, each of these are called a candlestick. And because we're on a 5-minute time frame, it means each of these candlesticks are representative of 5 minutes. Okay, so this will come up when this candlestick crosses this thick red line that you see running through at the bottom. Okay, so as soon as price crosses this thick red line running through, this sell arrow will come up. That is when I like to get in. So I'm going to show and share how I trade. Okay, so that is actually when I get into the trade. I do not wait for this candle to close first. I always get in once I see that it crosses the EMA. So, and the reason why I enter in at that price is because I find that I get better entries. So let me show you here. I'm going to put a nice thick red line. There we go. So that crossed that red line exactly where I've put it. So that means I've entered in here. So should price have returned for whatever reason, I would have still got a better entry, you see, rather than waiting for the price to close and then entering in here. This is when you start to find that, you know, the entries may be close to your price or it was near or it's hovering around. You know, you want to get in at the best position. And this is one of the ways of doing so. Okay, so you've entered in on one trade on that one. Okay, so let's go and look for the second entry. So you would have waited, so you would have taken that entry, you would have waited for a while, you would have cleared on this one. Okay, sometimes as you start to become more skilled, you can then start to take additional trades or waiting for pullbacks. Okay, so I would have entered again here, but it's easier to say now that the trade is gone. But you know, once we get to a stage of taking trades all together, you will see why I wait for specific points of entry. Okay, so let's say, for example, you've only entered that one, you might have missed this one. So I'm doing this to show you it doesn't matter. Okay, so you may have missed this one and you may have waited. Okay, it's better for you to wait than to rush into a trade and then doesn't go your way. Okay, let's find another one here. So I've got another entry here for you. So 5, 10, 15, price closed all the way down here. Okay, so with red candles, they close at the bottom. With blue candles, such as this one, they close at the top. And obviously a buy goes up. So obviously it's an easy way to remember. So a buy is a blue candle, which means it closes up at the top like a buy, and a sell goes down. So that means on a red candle, it closes at the bottom. Nice and easy way for you to remember. And you could have taken another potential sell right here. Okay, so you after this trade, you would have waited 15 minutes. So 5, 10, 15, you've cleared here. It's done a pullback, as you can see with these blue candles. And then it's gone in again for a sell. 5, 10, 15, price closed all the way down here. Okay, so essentially you could have entered, obviously most of us, if you are using the compound plan to help meet your targets, you would have only needed, I'd say 4 on a positive note. 4 trades a day keeps the job away, as Des likes to say. Okay, so you would have at least taken 3 to 4 trades. You know, if you saw this second one, you could have got in here as well while that trade is going on. So once you've got a 15-minute trade, you don't have to wait for the full 15 minutes before you can enter another trade, like you can see. So you could have taken 3, potentially 4 setups in the space of, let me just, can't see the time at the bottom. So this was at 4 o'clock, and this is, so within an hour. So within an hour of each other, you could have taken 4 trades. Okay, so that's for a red, that's for a sell. For a buy, the confirmations you will be looking for, just trying to find a good setup once again, blue cloud. Okay, so blue cloud started here, and we started getting our buy confirmations on the blue cloud right here. Sometimes, I have said before, when it's transitioning from a red cloud to a blue cloud, I always act with caution. And the reason for that is sometimes you see that it may take a while before you start finding buy setups. Okay, so if you do, or if you are entering in on a trade that is crossing over, this, don't forget, indicators always lag behind price. So price will do what it needs to do first, and then the indicators kind of follow. Okay, so if you do see this, take maybe a lower percent risk instead of 3% risk when you're doing that. Okay, so if you entered in against, once again, on this arrow, for buys, it's the same sort of confirmations, just the opposite way around. So have we got a blue cloud? Yes. Have we got our web strings spread apart? Yes. Have we got a blue buy confirmation? Yes. And is price above the blue cloud? Yes, it is. So we're taking the same confirmations, it's just the opposite way around. Okay. And once you've done that, like I said before, the price, when this, you see this blue box, it will appear, this buy confirmation will appear once it crosses this blue line. If it doesn't cross this blue line, or it just stays below it, it will not show. So it will, this buy confirmation will not show. If you see this little Wi-Fi symbol, it just means that they have called price at that price. So this is exactly where they've called price for you. It's like an additional indicator that's given by the educators. Okay, so they're actually telling you the specific point to enter, which is right here where the candle opened. Okay, so you would have entered here for a buy, 5, 10, 15, you would have cleared. Another buy signal entered here. Okay, so on this instance, you would have lost this trade. Okay, so I'm going to mark this as red because this does happen. And that just shows that it's a mini kind of pullback. So 5, 10, 15, price closed all the way down here. However, if you did need to roll this over, okay, if you did, for whatever reason, need to roll it over, you may have just about broken even because you would have entered here. Okay, so let me mark this up, because when you would have entered when price crossed, which is here. Okay, so 5, 10, 15, you would have lost that trade, okay, because price closed here. But if you had rolled over, which obviously rollover means you get additional time, and it may, if you've put a £10 trade on, it takes 30% extra from you. So rather than put down £10, it will take an additional £3 to give you more time. Okay, so if you had rolled over 5, 10, 15, you would have then cleared that trade. Okay, but I'm going to ignore that, pretend we didn't roll over, and mark that as a trade that didn't clear. Okay, let's go back and look at another setup. We've got a buy signal here. Mark that as black. 5, 10, 15. This one you would have cleared on, because once again, you would have entered in when price crossed. And this is what I mean about, you know, entering when you get the cross or when you get the buy arrow appear. Second entry you would have gone in for, I'm going to mark that one up. So once again, it crosses here, 5, 10, 15, price close just here. Okay. Another thing for you to be aware of, anytime you see candles like this, let me just circle it. These are called doji candles. So when you can see that there's not much body to them, this is body. Okay, so you can see all the bodies on this one. When there's not much body to these ones, it means that that's a sign of an indecisive candle. There's no direct decision as to which way the market is going. And that's when you usually see reversals. So I tend to kind of act cautiously, or now kind of slow my roll just to see what the market does when you start to see these doji candles. Okay, and as you can see, rightly so, you can see that it has done a pullback right here, right to the line, exact line where we lost our first trade. Okay, so you can see the trade was lost originally if we didn't roll over here, and price pulled back to that exact same line before it then continued in an uptrend, pulled back and then broke through that line. Okay, so as you can see, when it starts to break through, you can see that the line crosses and it starts to turn red. Okay, any questions on that part from what I've explained? So any questions on what I've explained on that section before I go on to show you how we mark up?
Hi, Chante.
Hello, who's that?
It's Odette.
Hi, Adele.
Okay, so as you were talking, I was looking at another pair
Okay,
and
what
literally
pair is
trying to
that?
follow what you were doing. Just a second. I'm looking at Euro GBP, and my query is, you know how you said that you would usually, because I was listening to you and trying to kind of like mark up and everything, but my query is, I think is it the EMA, I think is the line that you say that you usually go in where when the candle is kind of touched or crossing the EMA.
Pick one.
It's like, what does it mean when there's like the EMA is green going towards red? Does that make sense?
Like this one here.
Yeah.
It means that is a pullback. So that could be a pullback or it could be a reversal. If it is a
Okay.
reversal, it will change from green to then a dark red. So let me try and find an example for you. Here we go. This is a good example. So like you can see here, it was kind of like in a buy. And then what happened was, instead of it being blue, it should have been green. Imagine this being green, and then it turns to a dark red. As you can see, it's a much darker red than this one. When you see that there's green, like areas like this, it means that these are small pullbacks. Okay, so it goes red, it goes green. When there's a pullback, you then find that it's turning green. But don't forget, this will only show one when a candle specifically, like for example, this one has done its pullback, then it will then turn green on the next one.
Okay.
Yeah.
And if, for example, like, so then obviously would you, like, the price at which you would be going in at, would you be going in at where the last candle closed at for buy if you're buying? No.
By you doing that, I know Millie Mills does it. So sometimes, I'm not saying I'm an expert in any way, shape or form. This is a disclaimer. But when I do my own analysis, sometimes, how price is, let me just do a quick example. Okay, we're on a 5-minute time frame. Obviously, we don't mark up in 5 minutes, but let me just do a rough guide for you. It's like, imagine this being in a consolidation zone. Okay, so from here to here, we're expecting it to go up. It's like me entering in for a buy right where this price is. And sometimes I do see, based on my own analysis, sometimes we are entering in when price is in the middle. When we enter in the middle, that's already our possibility of clearing that trade being less than 50. And the best point, and the reason why you don't always wait for the candle where it closed last, is because you always need to look at zones. Just because that's where the candle closed doesn't necessarily mean that price may pull back to where that last candle closed. There may be another area of support or resistance that price needs to pull back to first. So for example, if I was to tell you that we're going to go in for a sell here, and we went and maybe someone missed that entry, we're going to look for the next entry. So what we then start to do is look at, remember what I said last week about flat areas. So I could have said, we're going to go in here because I could see that there is a little flat section here. Let me kind of darken that. I need to move this out of the way. Okay, so I can see that there's a flat zone area here. So I could say, okay, we're going to go in for, if you missed that entry, another entry is here. However, the more entries you get when price has already moved, it could potentially mean that you might clear it or you might not clear it. The point is getting the best entries at the right zones.
Okay.
Yeah. Okay, so let's look at this EUR GBP. So let's say, for example, let me just clear all my drawings.
So then would the right entry point, would you say then the best entry point would be when the candle is crossing over the EMA?
No, so we want to finish. We want to wait for this pullback to continue finish. This, we're going to go and analyze this, seeing as this is one of the pairs you brought up. We're going to go ahead and analyze this one. The reason why you want to wait is because, as you can see, you got a sell, this one with a clear, this one with a clear. This is a great one. Now price has touched obviously a resistance zone or a light resistance zone, hence the reason why you've got a pullback. Market never moves in one direction unless, you know, it's got really strong momentum or the currency is really, really strong in comparison to the other. Price will always pull back to a certain point. It's just a matter of figuring out where. And that's where your kind of support and resistance zones and marking up comes in. So now that you've shown us EUR GBP, we are on the 5-minute time frame. Looks like a good setup. The web strings are spread open. We've got a red cloud. Yes, it is crossing over, but what we want to may see is kind of where or how far price may pull back to. Let me plug this in. This is why I love Abby on the call. Abby's like the best. Okay, so thank you, Abby. So I'm gonna go on to the 1 hour time frame. Okay, so 1 hour time frame. And what we're doing here is where we're gonna do our marking up. So I'm just gonna drag this in. Okay, so based on what we see here, I'll ask you, Adet, where do you think our line should start from? So where we've got the high point.
Would it be?
Do you think it'll be here, or would it be here?
Where you've just been? Yeah, around there. Yeah.
Great. Okay, so that was the highest point price went to. So I'm going to put a red line in that one. And where would the lowest point be? Would it be where price currently is, or where price was before?
Where price currently is.
Okay. Why did that change? Let's change it back to this one. Okay, so I would put one here and one where price was before as well.
Okay.
Okay. And the only reason why I do that, I'm just going to make this a lighter color because, you know, like sometimes you find mini areas of support and resistance. This is exactly it. So even before here, this was the high price. And as you can see, the support and resistance zone is always changing. If any of you have looked on TradingView, let me see if I can show you what I mean. This is me watching Ethereum. Ignore me. So let's go and look at an example. EUR GBP. Okay, normally you have like different areas of support and resistance, but it's not showing because I've got a different indicator on. But either way, that's what I mean. You've got different areas of support, mini support and resistance. You've got your main strong zones, which you normally find in the higher time frames. And as you start to reduce, you know, going down to 15 minutes, 5 minutes, you may find other zones or other areas, but the ones that stand the strongest are the ones that you've marked up in your 1 hour time frame.
Okay.
Does that make sense?
Yeah.
Yeah, so I'm just going to mark off our other light areas. So I've got my strong area, which is the thicker line. I've got my light area, last area of my high in a light red line, same as the blue. Okay, now that I've done that, I can then drop to 15 minutes. In my 15-minute time frame, I can see that strong red line, which is where I said was the highest zone, is exactly where price got to before it rejected off. Guess what? The lighter zone, so the lighter red line that we put in, you can see price went back to it.
Yeah.
Touched it. It's a mini. Yeah, that mini support that we marked up went up, and then decided, you know what?
Down.
Yeah, and I'm going to break through it, and that's why we mark up those stronger support and resistance. So price went all the way through. Stopped around where I've put my light line. Stopped around this light line, and we can adjust that because obviously we did that on the higher time frame. Stopped around the light line, but let's say, for example, we left it where it was before, which was here. Okay, you can see it stopped around it, went up a little bit, and then broke through that.
Went down again.
Yeah. So this is the one of the main reasons why it's good to you know, once you get a good setup, always do your strong zones in 1 hour. Then you could do your mini zones, you know, any other areas that you see. Okay, so based on my 15 minutes, now we're in the 15-minute time zone, I can see like a light area here. So I'm going to put in another light area. And the reason why I call this a light area is because this is where price went up to previously to touch before coming back down again. So what you could do is watch to see what this, because this is where price currently is. If price closes, if price closes or breaks through this area, the next area you want to wait to see what price gets to again is here. Okay. This is a lot of lines, and this may be confusing, but you always want, if it does, always be looking for other little mini areas of support. If price breaks through here, where is price going to go to next? Okay, I can see there's another area of support right here where I marked. Why? Because price stayed here for a while, up a little bit, and then broke through. And it also served as that resistance for a while, and it served as the last support for this area. So it all depends on what price does at this moment in time after this closes. Now let's go to 5 minutes, because this is where we actually take our trades from. So we are currently where our light resistance is. So we've got 1 minute, as you can see. If you don't have the timer for whatever reason on your Liberty, everyone should, but how you show the timer, you just go to your settings wheel here. Okay, and then you just click on countdown to bar close.
Okay.
If you don't have the timer. But yeah, so that's what you would do. You would wait to see where price is getting to next. Let's see what it's going to do. I personally feel like it will reject and then go in for a sell. Yeah, and the reason why is where we've put this little light zone. Look good here, you can see. So at 522 or that area, 522 or above, if price in 1 minute doesn't close below, beyond that red line, I would then go in for a sell. Yeah.
But see, for example, here, okay, you don't have, okay, you've got the red clouds, but you don't have the sell arrow.
No.
So you would probably only have 2 confirmations at the moment.
Yeah.
So you can't go in because you need 3 or more, isn't it?
You need 3 or more. So this is when you start to take lighter risks. So you could go in 1% risk. And just like I showed you before, you know, like the one I showed you that didn't have the sell arrow on.
Yeah.
Once you do start to become more confident and looking for other areas of, you can now start to take additional ones without that sell arrow, but with smaller risks. So let's move this up. It's got 9 seconds. It's rejecting. It may try and do another blue arrow, but it will touch this 522 area again, because you can see it's rejected. It's going to do another blue arrow, probably touch it. Let's see what it's going to do. Let's look at the chat box. How would you know which price to use? How do you mean, Huxley? Huxley Roberts, how would you know which price to use?
Okay, the question is like, okay, you're probably going to decide whether you're going for a buy or sell, right? But you want to know which price, like the targeted price. So like if it goes lower, okay, for example, if you're going for a sell, okay, a buy, I'm going, okay, a sell, right? And you want the price to go, at least you have a particular level, and you hope that it will go below that, so you can have a much bigger margin. So the question is, how would you know which price you should look out for?
Okay, so that all depends on these last 3 digits here. So where I've marked that up, you know, I just mentioned now, it may touch this area here. You would look at the last 3 numbers. So even on this cell, okay, so I get what you mean. So let's say, for example, it's crossing this area. How do you know when to get in? So this is all to do with your marking up. your marking up would then come into effect. I could see that the red line would have crossed through here. So whichever price that is, what's that? 500. So on here, I would have entered at the 500 mark on my broker for a sell. And like I mentioned before, because you're going in for 15 minutes, it is a good amount of time to let the market do its thing and move in that direction. If after 15 minutes, price isn't going that way, the likelihood that price will go that way, it does mean you have to kind of go back to look at it again. And the way I see it is, if you are, we've got Hourglass as well. Hourglass, you enter in for 3-minute trades. You have different entry points. It's the same thing. It will tell you, but sometimes you can get better entry points, because don't forget, if you're going in for a sell, we want to enter in at a higher price. If we're going in for a buy, we want to get in at a really low price. And if you've gone in for 3 minutes and the market still needs to do its thing, and you've maybe rolled over, then you might sometimes roll over. I think the maximum times you should roll over, not maximum, but the advised maximum rollovers you should do is 2. So if you've entered in on a trade for 3 minutes, 3, 6, 9, it's taken you to 9 minutes. So you may have gone in for 15 minutes. It gives the market enough time to what you're going to do. So for example, going back to this same point that I showed you, once it crosses this thick red line, we've entered in at 500. Okay, so 500. If, for example, Huxley, you've then entered in at 495, it's still kind of around that price, but the best price would have been 500. Either way, 15 minutes, it gives the market enough time to move in the direction you've expected it to go into. Does that make, did I explain that well enough for you? Did you have more questions on that specific area to explain better, or is that okay?
Yeah, I get a point. At least, what's okay, I might be wrong, but what I'm getting is,
do you want me to give you an example for a buy?
No, let me just like give what I understand by it, and then if I'm wrong, you can explain further.
Okay.
It's like, since you've marked up your resistance lines and support, and then more or less it's where your resistance line and okay, what's this support line that keeps no, not the support line, the covey ones.
These ones. All these lines?
Yeah.
They're EMA lines.
Sorry, yeah, like which tends to touch the candle, either it will touch it or go over or underneath it.
Yeah, so here's the resistance. So this is like the mini one. This is like a mini resistance line I've put in.
Okay.
So obviously, let me zoom back out. So our strong area of support and resistance. So this is our strong area. On the 1 hour time frame, our strong area was here for our resistance. On 1 hour, our strong strong support was here. And basically dropping down to lower timeframes to get as close to price as possible, just looking at where price may get to or go to, that's where we've put in our mini support and resistance zones. Okay, so for example, this light red line was a resistance zone. Why? Because that's where the last resistance was. So as you can see, price has kind of gotten near to it, and it's now rejected. We're still waiting. This is the thing about HFX. I personally would still wait for that 522 price. Sometimes you may also find that the brokers have maybe a 5-point difference, maximum 5-point difference between the two of them. But I don't trust this. Price will still try and get to this area. Some people may become impatient and say, oh, do you know what, it didn't get there. Once price gets to where this is again, I'm going to enter. And you normally find that those that are impatient, they enter because they are impatient, and it goes the opposite way, exactly where they needed it to get to in the first place. So all of these are your EMA lines. You just have to kind of look at your mini support and resistance zones before entering in. But a good video, Huxley, let me just go live. Like, one thing I do love is Millie. I do love Millie Mills because she explains things really, really well. Here we go. So if you go to Goliberty.im, and click on Millie Mills. And if you go scroll down and go to her favorite sessions, so I give people to do on our checklist. And just move all of this out of the way because I can't really see. Ooh. There we go. Oh, good. So where is it? She has one for support. There we go. Support, resistance, trend lines. So SRT is support, resistance, and trend lines. This would be a good video to watch. And she does explain how you put in the trend line. So your Bollinger Bands also can act as one, but it's a good kind of example. If she doesn't explain it really well for you, because obviously I might say she's really good at explaining, and for you, maybe you think to yourself, oh, she's okay, but I would have liked it explained more. Best people to go to is Dr. Josh Lee and Brandon Boyd. So if they click on their name, and you can type in the video, okay? So I don't think they've saved it as SRT. So you could just put in support, and you can find good, exactly like what I've seen. So you can see that they've drawn up several lines. They've got their strong support and resistance zones, light support and resistance zone. It's very good to kind of put it all into perspective and it shows it and breaks it down into more depth. I hope that helps, Huxley. Right. Let's go back to the chat box. So we've set levels on the 1 hour time frame. Yep, so you look at levels on the 1 hour time frame, but before you start looking at the 1 hour time frame straight away, you want to look at the 5 minutes just to kind of see which way direction is going. Because what you don't want to do is start on the 1 hour time frame, spend all your time marking up these support and resistance zones. By the time you drop back to the 5 minutes, it's not even a good setup to take. So you've just wasted your time marking it up. So it's always good to look at the 5 minutes. Is it a good setup? Oh, it's good. Okay, let's go to the 1 hour and do our marking up. That's the best thing for you to do. From 1 hour, then 15 minutes for any other mini areas of support and resistance, and execute on the 5 minutes. For Aaron. Thank you, Pam. So when an entry price is called on the alert panel, do we need to enter at that price, or is it just a guide? So for example, this is a good one. So let me click GBP USD because that's the one that's in this alert panel here. So as you can see, it says called 2 hours ago. Okay, 2 hours ago. This is 2 hours ago. Let me just zoom. Zoom. Trying to zoom in as much as possible. It's not really helping me. Okay, so this is 2 hours ago. You see that little Wi-Fi symbol I mentioned to you earlier? That's where price was called. So as you can see, they call the price at 869. If we hover on it, it's 869 or 868 where I'm hovering. Okay, that is exactly where they've called for you to enter for a buy. You've entered in for a buy based on that 1 hour time frame. You don't always enter with this price unless you get it at the exact moment it's been called out. So if this said, I don't know, 2 minutes ago, 3 minutes ago, let me look on 1 minute. So for example, this at 18 minutes ago, I'm just giving you an example on a 1 hour time frame. Okay, great. So this is on a 1 minute time frame. They called for a buy at this candle here at 049 where I'm hovering. You've gone in for a buy. Ta-da! is gone in for a buy in the exact direction. Let's look at this one, USD JPY. I'm gonna see, they called this an hour ago. So where's an hour? Oh, with 1 minute, we've got to zoom back so far. Lord help me. If anyone sees the Wi-Fi symbol, let me know. No, I'm not seeing it. I've scrolled back more than 1 hour. But yeah, I'm sure you get the gist of what I mean. So what basically, unless it shows here that it was close to where price was called, then that's the only time you would enter in on the price that's given to you. However, when you click on, let me go back to 1 hour and a 5 minute time frame. For example, we're looking at GBP USD. It said the entry was at 869. Obviously, as you can see, price is at 869 currently, but you wouldn't go in for a buy again on this one, you would still do your own analysis. 3 hours ago at 869, you would have. Here we go. Prices returned exactly where they've told you to go in for the buy. Had you entered where it told you to go in for a buy, 5, 10, 15, you would have cleared. So you only want to enter price where once it's closer to your time entry. Thank you, Adet. Thank you, thank you. You do a really good job explaining. Really great job. Thank you, Pam. So hello, Chante. I just wanted to ask, as a beginner, would it be better to learn Liberty before Cash Trap? I'm going to be a bit biased. You can learn both. Depends on what kind of learner you are. You know, with Cash Trap, let's even go and show you Cash Trap. It's not my forte area for training, but you know, I'm going to show you anyway. Cash Trap, I love Cash Trap for the evening around this time. This is when I like to look at Cash Trap. And it's just a preference, really. It's just like tying shoelaces. Like some people go under, some people like to go over. It's just a preference. Now, with Cash Trap, you have the DXY, which shows how strong the US dollar is moving. And then you have all of the currency pairs underneath. This refreshes every 5 minutes. This is why some people prefer it. Some people don't want to, you know, do lots of marking up and, you know, waiting around. Some people are impatient. I would describe myself as an impatient person a little bit, which is one of the reasons why I went from traditional Forex, which I love because obviously it's got a great risk to reward. I still love my crypto side, but if that is you, then maybe Cash Trap may be for you. Okay, so you have, it works based on a point system. You have 7 points for great setups. So as we can see, we're looking at USD JPY. You want time to be as close to time, so like less than 1 minute ago. That's when you want to take setups. If you find that it says 3 minutes ago, you do not want to enter in on trades that are called more than 3 minutes ago. The reason why is because price is already gone or needing to do what it needs to do. So you could see that the USD is stronger. The US dollar is stronger. It's at 54. And you can see that it's crossing through the stochastic and it's right next to the resistance zone. So what you could do is wait for price to come back to that 298 area, go in for a 3 minute buy. Most of the time it's fine. However, I'm sure if any of you have traded with Matthew Thayer, he started his $1 million account back at, I think, 1,000 at the beginning of April. You know, he's done it all over again for you. So if you can wake up early, you can start trading with Matthew Thayer. Sometimes he does need to roll over. 3 minutes or shorter trades may need rollovers, and that is the only thing, but it's up to you. I would say you could do both, but if you're a person that likes to take things and it might be too confusing, then one thing at a time. I can't really choose for you because we're all different. I learned Liberty first and then looked at Cash Trap afterwards. And that was how I was able to differentiate which ones work better for me at which times. Kemi, you're welcome, Kemi. Thank you so much for the explanation. Great explanation. Thank you, Rachel. Thank you, Maribel. Matthew, you're doing a great job teaching the newbies. My question is that, are we the ones trading by ourselves or they are stockbrokers here to trade for the investors? So you are trading by yourself. So you can trade. So what you're doing is you can either trade by yourself and learn how to become independent, or you could trade with these educators. Now, these educators aren't just any Tom, Dick, and Harry. They are specifically chosen by IM Academy. And their accounts look delicious, what I would like to describe it. Delicious. So Millie Mills doesn't show her account, but Matthew Thayer does, Christian Lopez does, not Christian Lopez, Matthew Thayer, and who is the other person? It's going to bug me now. Nez. So Nez Vequez does. They both do. DL Woods does. Active caution with risk management with DL Woods, but yeah, they've all been chosen specifically by IM Mastery Academy, and they're all really, really good. So it's up to you what you would like to do on that. Back to the chat box. That's it. Okay, so my last one for this evening, because I think I've kind of explained Webslinger, is Simple Scalper. Okay, so Hourglass, if you did want to kind of watch to see how Hourglass works more, don't forget, just go to amefinance/HFX, which is what Des calls the one-stop shop for HFX. And you can learn the basics for trading high frequency Forex. And once you scroll all the way down, you click trade independently. And then they've got the cash trap. So it explains it. So it shows you how to kind of work your way through the videos. Okay. So that is that element. Back to Liberty, you do have the other option, which is Simple Scalper. I may need to cover this next week because we're 3 minutes away from our time. But I hope you have enjoyed the session so far today. I am going to take a few more questions because I don't want to kind of rush through this one, and I don't like doing a half job. So I can cover this again next week. Let me just go back to Webslinger. Okay. You are welcome. You're really, really welcome. I hope that, I didn't even see, we came off from EUR GBP. I wanted to know if it broke through that zone or not. Adet, did it do what we needed it to do? I think it did, didn't it? It came to that other zone, or near the other zone, because I remember I put my zone here. And it did go in for a sell, didn't it? Yes, it did.
Yeah, it did.
Yeah, it went in for a sell. See? Ta-da!
And it was actually good because how you marked up is literally how I was actually doing it. So I feel so good. Like I'm really encouraged that I
did it right.
I put loads of like different like lines, like your idea of having like your strong line and your not so strong line, highlighting. That's the only thing I have to, but I literally had like lines at different points. So that's really, that's kind of really encouraged me and motivated me even more now. So thank you.
Oh, that's really, really good. I'm glad to hear that. Thursday, don't forget Thursday, you're going to be showing, maybe I should get you to share your screen on Thursday. I'll get you to share your screen. But yeah, no, that's really, really good.
That was really good. Thank you.
You're welcome. So everyone, I hope that you have enjoyed today's session. We'll be back again next week. So next week we will be starting at 8 o'clock again. And then I'll take you through, maybe I'll start the opposite way around. I'll start with Simple Scalper next week. But yeah, I hope you have an enjoyable evening and take care.